Good morning, everybody, and welcome to today's Trio Talk. Hey, the gang's back together. Hey, Patrick. Hey, Darryl. How you guys doing?
Hey, we're good.
Good,
Thanks,
man.
Aaron.
Yeah,
Good to see you guys. I know it's been a while since we've done one of these all together. We've had
true.
different guests on. We've had Lindsay. We've had Emma. We've had some really great guests. But today we're actually going to make this really, really simple today. We've gathered a bunch of frequently asked questions, and we're going to call it a mailbag of questions from you guys on all the process from the just the processing customers, how to work with customers, the transaction process, what is expected from your customer later on down the road when they're in the lease and transitioning to home ownership. So there's a lot of different topics we're going to cover today. Before we get to that, though, I do want to remind you we did send out a survey, and we're going to send out another one today over social media and email. This is asking you guys what topics do you want us to cover in the Trio Talks. So if you haven't had a chance to join us on a Trio Talk before, that's okay. You can find them on the Facebook group. You can find them on YouTube. They're there as well. And if there's a topic that you want to talk about, maybe it's already in one of the YouTube discussions that we had maybe just recently, right? So go take a look at those. But if there's a topic you want us to cover, please go ahead and put it in the survey. That's really important to us so we understand what your needs are, and that way we can go ahead and provide you what you need. All right, so let's go ahead and get started. We've got some frequently asked questions, guys. I'm just gonna throw them out here and let you guys decide who's gonna answer what here. So let's go ahead and throw this one up on the board. First question. This is from our customer processing team. How can I show my rental history? What if I do not have the full 24 months that you are requesting? Obviously, this can be an issue, right? We've had a lot of customers, especially recently during the pandemic, living with family members, right? So they can be closer to their family members, or they've just had intermittent sort of renting history, right? So how can somebody go ahead and show their rental history?
I'll take it.
All right.
Um, so,
Right
first
out
of
of the
all,
gate.
let me
Love it.
explain it this way. The best way to display your rental history is to just provide us with a third party, register that shows your on-time payment history. So, most of the, third party landlords, they'll have this built into your online payment system. Um, and that's the best way because then we can just see it from their system, documented that the dates that you've paid, the amount that you've paid, and all of that. That's the easiest and best way. So if you talk about streamlining an approval, that's the number one, way to show your rental history. If you don't have that, then we're stuck with some challenges, right? We're looking at getting a verification of rent that's got to be signed by your landlord. Sometimes that can take a little bit of time. That shows the amount of rent that you pay, and then if there's been any late payments, they have to list them there. If we don't have that, then we're left with further challenges, and we're trying to get, proof of payment, whether that's canceled checks or withdrawals from your bank account, which is just more involved in terms of review and the production of that information. And Aaron, you mentioned the pandemic and changes, and with people that have, moved back in with family to save money to be able to get into home ownership, and that's great. But what we want to see then is that we're not going to look at, mom and dad signing off on a verification of rents. It doesn't matter to us, right? I mean, mom and dad are on the same team. They want to make sure you get out of the house now. They don't want you there anymore. So they'll kind of sign whatever. We really are then looking at what have they saved. So it's kind of the opposite. If you're not spending money on rent, we want to see that you've saved money towards your down payment funds, right? So if you're looking at getting into a home, that's the natural thing that we're going to look for. So if you're living with family, we see no savings and we have no rental history, that's a very difficult situation for us to be able to rely on the fact that you can pay a monthly payment. So sometimes those are going to be just straight up denials. I mean, we just can't get comfortable with your ability to pay. So if you're in that situation, what we would advise, if you have customers that are saving, living with friends and family to save money, they need to be saving money. That's kind of the point of it, right? If they can't save money and they're spending everything every month, we have no way to justify that they can afford their monthly payment with us, right? So pretty simple stuff, Aaron. But number one thing is that online rental history verification, and we do want to see that they've been making that for a couple of years. If we've got living with mom and dad for part of it, we've got 12 months of good history or more with a third party landlord, then that may be something where we're going to require some sort of additional security. So we'll do an approval with a last month's payments. We'll ask for an additional month of prepaid payments for us, just in case there's a challenge that we have with them. So yeah, there we go.
And the same thing would go if they had owned a home and they relocated, where they went and sold their house. Now they're in a temporary rental until they would just go back and show those mortgage payments in addition to their rent payments to confirm.
You got it.
Yeah.
And I love that Darryl, you stressed, be saving throughout this time, right? And that's really important. We need to see that, you are accumulating and you are knowing how to kind of manage that money, right? It shouldn't just be leaving the house as fast as you get it coming in, right? So
yeah, and if there's a COVID setback, then we understand that, and you have to document that for us. So we get it if someone lost a job and they've been out of work for a while due to COVID, but now they're back in employment and they're they're on their feet now. Then we want to look before COVID and after COVID to see what the behavior pattern is.
Absolutely. All right, let's get on to the next question. Before I do, folks, remember, this is interactive. You can ask questions. If you're on Facebook, go ahead and put that in the comments there. If you're on YouTube, do the same thing, or Twitter. I'll get them right here. We'll go ahead and post them right in front of us. All right, next question we have is also from our customer processing team. Can unemployment be used as household incomes? This is a great question. Patrick, can I throw this one on over to you since Darryl did last time?
I was gonna punt to Darryl because my answer to that is no. But
I mean, sometimes, Aaron, when they put the two of us on for some of the detailed questions, is trouble. And bottom line with unemployment is no, it's not household income because it's temporary. So we understand that people go through unemployment, but unemployment isn't a reliable continued source of income. So it's not something that we can add in there. Again, we understand with COVID that unemployment was helpful in helping folks make ends meet, but we need to look at the sustainable permanent income that's going to be available for them to make their payments. It's a long-term contract, right?
Absolutely. Yeah, that's not the long form of payment there. All right, next question also comes from our processing team. Why is my credit being pulled showing as a hard inquiry when you state it is a soft credit pull?
Yeah, that's a great question.
Patrick, yeah.
No, I mean, we see this question quite a bit, I think, in terms of customers that get all excited, but in fact, we're not doing a hard inquiry, and we don't do a hard inquiry without their permission, or at least their notification that we're going to do so. So we do a soft pull, and there's often a notification that goes out when that soft pull is completed that just says that your credit has been pulled. It doesn't specify necessarily soft or hard from the reporting agency. So people get really excited about it, thinking it's a hard pull and their credit score has been, gone down, which is just not true.
Yeah.
But
it's just notification requirements. So I mean, we use Equifax for those, and Equifax, is required to be able to notify folks that their credit has been pulled, and that's what it's doing. But yeah, just to reiterate, it is a soft pull on the credit, and that's good for people to know. We didn't used to do that. 2 years ago, we were pulling tri-merge on everybody, and it was a hard credit pull. Now we introduced a soft pull credit, and we will pull hard, like Patrick mentioned, if we have issues with the credit report that was pulled. We may re-verify that by doing a tri-merge, full pull. But we do let folks know, of course, that we're going to be doing that, and and just verifying if there's anything that's in question that may or may not have been reported on that Equifax pull. So that's a rare situation. Usually we pull the Equifax. That's what we use to verify the credit history.
And you could go check your own credit score, but as you know, it's kind of a living thing, right? It adjusts all the time depending on payments and things like that. So some folks that I've heard, they see it go up or down 5 points, and they kind of freak out thinking it was from us or something, but it could have been from something else completely, right? So
yeah, and that's a great point, Aaron. I mean, people don't understand the dynamic of credit score, right? And that's totally understandable. I mean, when you have a credit card balance that's say your capacity is 2,000, and you're go down to the Nordstrom sale this month and you pick up some shoes, all of a sudden it kicks it up over your 30% balance. That could really make an impact to your score, even though it was yesterday to today, but the credit was pulled today versus yesterday. That's going to make a difference to it. So inquiries just are not the big issue in terms of impact to credit, and it is a temporary situation. Now, where inquiries get significant are when people are out there, especially shopping for cars, and they're going to every dealership and submitting their deal, trying to see if they can get credit, because those dealerships many times will just flood all their options with the consumer's application. And there might be 10 different pulls done from one single dealership. And so it's very important when people are looking for, car loans, to be specific on what and how their credit can be pulled. That's kind of a traditional thing, especially of, I shouldn't say that. I think it really just depends on the dealership, but it's definitely more of an issue in the auto world than it is in the housing world.
The other thing too, we find, Aaron, is that there are several different FICO scores out there. There's FICO score 5, 7, 8, 10. There's a gazillion of them. And Darryl's point, the car guys use a different score than the mortgage lenders, than the credit card companies, and so I think that often surprises people too, where they do their little lookup and gives them a score, and then they find out that their actual when we do a soft pull or something, that we report their scores much lower. Which you would always, in my experience, you always find that, with a mortgage application, when they pull it, they're using an older FICO score that's always lower than what you're going to see if you go on and get your free report. So just some things to keep in mind as far as credit scores are concerned. No,
that's a great point, Patrick. And I think that's also, and folks should understand this, but that's one of the benefits of TRIO, is that we don't just look at the score, we look at the actual credit within the score.
Right.
So, we do have a lot of flexibility. And so when that score pulls for us and it's, below whatever you want to say, 580, we're looking at that specific credit profile to see whether or not that household will qualify for a program. Now, when people make initial applications and their scores are significantly low, we are doing essentially auto denials on those, and those are 535s, 540 credit scores. It's very hard. I shouldn't say it that way. Usually it's pretty difficult to get a score that low without having some pretty bad things on your credit record, right? Sometimes there's some folks where they've just got a few collections that are minor and they just don't have credit, and that's driving their score low. And if they're calling back in and saying, hey, what happened? I had an auto denial. We'll take a look at it in more detail.
That's great. Thanks, guys. I think people think of credit as just a quick singular thing that they can pull. And as you mentioned, Patrick, there's many different outlets for it. And there's also the 3 big ones, right? And when people are pulling something from, I'm going to pick on Credit Karma here, right? There's only pulling one score. And as you said, Darryl, there's a lot of different facets from it. I was not aware of that about car dealerships, pulling that many from just one person. That's incredible, right? But you're absolutely right.
They broadcast it. They send it out to, 4 or 5 different banks and providers as essentially a broker of their loan. And all those providers then are pulling credit the way that they need to pull credit to make a decision. So, yeah.
Gotcha. Yeah, that's important. All right, this is our last question from the closing team. Let's say a customer's been pre-approved and they wish that that pre-approval amount was more. How do they increase that pre-approval amount?
Gosh, that's a great question. Do you send the processing team pizza for lunch? No,
I think so.
Yeah, seriously, for increasing your approvals, part of that can be in terms of what's in your credit profile, and that could be paying down some debt. It could be clarifying some of your income. I think that we see this in the self-employed and small business owner end of it, more, where there is quite a range of what could be interpreted as their core income, with what they report as expenses and the like. So I think clarifying for sure for us what the income actually is that they're receiving, and the cash flow that they're getting to be able to use towards their monthly payment. And obviously, the payment history that they have is a significant influence on that. So if we can see that someone's been paying, a rent at a comparable to what they're looking for their new housing payment, then that's an easier decision for us if there's a reason why their eligibility was rated down below that number. So I think overall, it's a clean application with clean income. If there are some issues in their debt coverage, debt service, again, it's the same thing that all the mortgage guys will or tell their customers, don't go get a car loan the month before you apply to get a house. I mean, people do this stuff all the time, and it's like, you just got 2 new cars in the last 4 months, and you increased your payment $600 a month, and now you're coming to get your house. That's kind of the opposite. We don't want you to burden yourself with debt, period. But, making those kind of short-term cars or short-term decisions, right? They don't benefit you at all, except for driving someplace and driving back from that place. That's it. There's no value to that vehicle. It's depreciating assets. So the fact that people go out and choose to, get higher payments for that is, frankly, you can hear it in my voice. It's really a frustration for us, because it's like, what are you doing? Why did you really
Darryl,
need a
I had
$45,000 truck? So when you're trying to then tell us that your approval's too low, so, like, be reasonable, people. And that's probably the number one thing about seriously preparing to look at purchasing a home, is that, are you mentally prepared to make the commitment? And so, again, I don't mean to get off on a tangent there, but
Darryl, I was going to reinforce that. I spoke with 2 lenders this week that were coming to Trio because their customers were super excited about a brand new house that they were building, right? And wanted to have a brand new, shiny new car in front of that house, right? And so they went out and bought a brand new car right before they closed on the home. And suddenly, everything's awry, and now everything's in chaos at this point, and they're trying to figure out a solution for them. So it's exactly what you were just saying. And people say, does it happen that often? It happens a lot.
It does.
Yeah, it really does. Or people just buy cars that are, more than their yearly salary, right? And that's kind of a rule of thumb right there, right? It's just I don't even know where that term came from, but but that's just kind of it's an important thing, that just to keep that payment down and to keep within that range. But yeah, you're absolutely right about that. So what happens if, let's say I applied, but I didn't add my wife to it. Can I add a co-applicant to my application to increase my amount in any sort of way?
Yeah, I mean, if it's a partner or spouse, definitely. We do not put a lot of reliance on folks that, aren't immediate family, right? So, and, adding a child that's living with you that has a short-term job is not going to help either. We're looking at, permanent solutions, right? So, but definitely, if there's a, co-app that doesn't qualify at first, and we can get them seasoned so that they can qualify, then that's definitely a way to help increase the approval amounts.
And that's
You know,
great. I have actually seen that. Sir, go ahead, Patrick.
No, that's right. I was just going to say, look, I mean, buying a house, financing your house is not an impulse buy like at the grocery store where you see something at the checkout counter. I mean, it takes some preparation and some planning and some thought behind it. And so that has to, you know, everything from increasing your amount or at least qualifying even for the program. And it doesn't stop there. And it you know, we're providing you that financing bridge to home ownership, right? And financing with us to start with, and then looking forward in the future to financing and qualifying for your ultimate purchase, whether through the assumption of our loan or with a new loan. You know, that it doesn't just stop here. You have to continue that discipline, if you will, in planning before before you get to the ultimate goal of owning, you know, purchasing and through your option and owning on your own right. So, you know, I think that's just an important discipline that is important for agents to communicate to their customers, you know, especially the first-time home buyers or ones that are a little less sophisticated than people that may have purchased a home in the past or have a better understanding of their finances and whatnot. So
that's an interesting point, Patrick. I love that you said that, because you think about it. I mean, your credit and things like that are, you know, a accumulation of everything you've bought and purchased throughout your entire life. And so, you know, it's this baggage, so to speak, that's kind of following you around, right? So an impulse buy, you can't just go ahead and, you know, like you said, something's, you know, bag of chips at the checkout, you're like, oh, that sounds good, right? You know, it can't be just something you do within a month unless you have things kind of in order. So that's a really interesting point.
Well, just wait to get your car until after you get into your house.
There you go.
That'd be my point.
Yeah. There you go. Yeah. Get the keys first and then go buy the car, you're saying. Okay, got it. All right. So I'm going to switch gears here. We're going to talk about some different things here. What is the best way to introduce Trio to the seller or a new home builder? I know you guys have we're going out and talking to new home builders for a long time, trying to introduce them to Trio. And what would be some things that you would suggest?
Go ahead, Patrick.
Yeah, well, there are a lot of different ways to skin this cat, if you will. One is, on our trioresidential.com website, under our resources, we do have an excellent, one-page sheet for you to share to the builder or the listing agent on behalf of the builder that explains Trio in our program. But I think the best thing as far as approaching a new home builder with our program is just the fact that this is home ownership financing, and so we deem it the own option mortgage because we're using an FHA mortgage with the option ultimately to assume that later. But I think in terms of builders, this is home ownership financing. This program uses an FHA loan. We have a very simple process in terms of how it's a guaranteed close for the builder. There's no risk in that process as long as the home appraises, we're good to go. So I definitely would suggest that you get familiar or utilize that sheet that we have in our resources on our website, because it is a helpful tool to be able to hand to them, and then it gives them the access to go do some homework on their own if they want to, and go to our website and learn a little bit more.
Yeah, and I think you nailed it. We've got the resource there, and just reinforcing that it's an institutional buyer that's purchasing the home, but it's a home ownership vehicle. It's home ownership financing, like Patrick said, for the consumer, and we're really just providing bridge financing for them. And that's a great tool that not only can they use for your customer, but perhaps there are other folks that are coming to their sites and that may need a program like Trio, and we can also assist with those folks. So it's not just a one-time deal if they can work with us with their project.
And the other thing we often will tell them too when we speak to them is that, look, when they're working with customers that end up getting a late stage denial, that we can often come in and fill that void for them and get that home closed. And granted, in the current environment, builders aren't so sad to see that happen, because they're able to then jack the price up and sell it to somebody else that's waiting in the wings. So, but in a normal circumstance, that's definitely the case. And it's actually still the case today for a lot of builders. They don't want to go through the cycle of having to, the time cycle of getting somebody else now in the home and having to wait another 60 days when they need it closed. So that's often effective for us too, as far as agents, talking to builders out there.
And Darryl, I always think about what you talk about. There's a couple different gatekeepers involved with a new home builder, right? There's the sales manager, but then there's also the lender, right? There's different people like that. And so, talking to both of them so they kind of understand how the process works is always important. But
yeah, for sure. We found that if you just talk to the site agent, then the lender sometimes comes in and blocks the deal because they're not getting the mortgage, and letting them know that they can, in fact, close the loans, for Trio is a way to overcome that very simply and help them know that they can actually get, more closings if they use us. And the example you had, Aaron, earlier today is real, right? Where it's a 3-month, 4-month, 5-month build process, and people make changes during those 3, 4, 5 months. They change jobs, they have job losses, those sorts of things when they're going to get ineligible for their direct mortgage, and we can come in and help still provide that financing for them and close a deal.
Well, speaking of lenders, Patrick, I want to throw this one to you. How do I connect my lender to Trio?
Well, that part's very easy. So it depends. There's a couple points to that, but we have 2 master servicers, lenders that work with our program, and we've done that in order to establish for any lender to work with our program. But one of the ways that we do that is we've established the ability, depending on how your financial firm, your lender originating firm is set up. You can do that either through a correspondent channel as a mortgage firm, or you can do it through a wholesale brokerage firm. So again, any lender can do that. Inquire with us. We'll make that introduction for you to either of our master servicers and master lenders for our program, depending on what your firm's interest or how your firm is set up to engage and whether as a correspondent or a wholesale brokerage type of originating firm. So we make that introduction, put you in contact with those groups directly, and then they help you get set up in terms of getting that paperwork in place for whichever channel it is. And it's that simple ultimately. I mean, it really is.
Depending on the size of the brokerage, it can take 5 minutes or it could take 5 months, right? So just, give yourself some time with that, introduce us as quickly as possible and we'll take over from there. But it usually is pretty quick. And I've seen it, we've really streamlined the process lately with Land Home and Essex. It seems to be a lot faster now than it used to be, which is great. But
I will say the LO can't do that on their own. It has to go corporately. Yeah. It's a broker. It's a firm to firm agreement. So it's not something the LO can just sign off and join on and go. It does have to go to your corporate officers to be able to, who are responsible for those agreements and reviewing those and signing those to put that in place. So.
But once you have that, I mean, that's fantastic, right? Then the agent and the lender have kind of almost this great agreement and this way to go ahead and process any sort of potential Trio customers out there, loan denials, anybody that's coming your way. So it's fantastic. I'm going to continue. Oh, go ahead.
No, I was just say a good example of that is a firm like Nexa Mortgage that has, once we put that agreement in place for Nexa, any of their loan officers, in any of our active markets can engage in our program. They don't have to do anything special. So I think the bigger thing is just for them to be aware that they can do that. I think a lot of them don't even know that exists, that opportunity. So,
absolutely. Yeah. All right. I'm going to continue on the lending train here. We've only got a few minutes left, so I want to make sure we get to this. So I'm going to switch gears here. Let's talk about once the customers, lease the property, they're living in the property, they're living with Trio, and they're getting ready to go ahead and fully transition into home ownership, become that homeowner. A question that our closing team sees quite a bit is, do I have to use your preferred lender when I purchase?
I'll take it. So we do require that you make application with our preferred lender. We don't require that you use the preferred lender at the end of the day. But I will say that if you're looking to assume the mortgage, which a lot of our folks will be over these next, 2-3 years, it's not our decision. That's an FHA requirement that the servicer does the approval for any assumption. So, at all times, let's just put it this way, we will be recommending, that our customers make application with our preferred lenders so that they can make that decision whether or not the assumption versus new loan is the direction that they're heading. And I'll just say it this way, we're not doing this for any other reason than to help folks transition into ownership. And what happens, 3 years, the first 3 years is a long time, and people are in their homes, they're talking to their friends, they're talking about purchasing, and invariably there's a loan officer in the mix that works their way in and wants to do the loan. And it's great to use friends, and it's great to be able to help people out that. But the reality is that I would say 1 out of 4 of those are successful. And even within the 1 out of 4 that are successful, those folks aren't getting all of the benefits that we provide because the lenders they're using don't understand how to apply our home purchase assistance, how to structure the purchase and sale agreements, how to work with the tools that we build into our program. So they're spending more money. Usually their interest rates are higher. And there's this natural inclination of, just people that if we require that they do something, there's a reason that it's bad for them. And it's the exact opposite with our program. I mean, we really do this for the benefit of our customers. And again, it's not required that they close with us, with our preferred lender, I should say, but it is definitely to their benefit that they do. And I get it when, some people have a VA loan. We can do VA loans. They can do those direct. All of our lenders, have a full plethora of loan products. I don't think there's really anything that you could get outside of our preferred lenders. So if there is a product, then great, we totally understand that, and you can go use it from a third-party lender. But the reason why we do it, I think, just to reemphasize, is because we know that they understand our program, how to apply the home purchase assistance, how to get you the least amount or the best scenario in purchasing your home from Trio. And on the same note, just know that the price that people pay gets better the longer they stay with our program. So when people get into Trio and then we get a phone call, I want to convert, I've been in now 3 months, I'm ready to buy. It's like, why? What's your rush, and what are you benefiting? Usually it's a loan officer that they know that's trying to get a loan, just dead serious. And then, or there was some sort of a, seed that was planted by somebody along the process that, hey, you just need to buy as soon as you can because for some reason, maybe Trio pulled the rug out from under you. It's a contract. The purchase option is legally given to them under our contract. So unless they're planning to default and not pay, they still get the purchase option. So my point in saying that is that we structure the program for a very specific reason, and we have tools built into it to help benefit the customer. And so if they just follow the prescription that we have, they're more than likely going to be more successful than if they try and do something different on their own.
Yeah. I mean, look, your price isn't moving on you as long as you pay your lease payment on time every month. And so to Darryl's point, the longer you wait, enjoy that appreciation, hopefully that, the value appreciation in your home while you're in it. And then you can use that on the back end when you're ready. So yeah, there's just really no reason to be in such a hurry to rush to buy it. It really doesn't benefit you, at least until after a couple 24 months.
It's not like you're moving, right? It's not like you have to move or anything. You're really only changing who you're paying at that point. That's, I mean, that's the only difference. But like you guys are saying, that the longer you wait, the more that home can usually appreciate. And right now that's obviously happening quite a bit. And Patrick, I know you know somebody that happened to recently, and it's great, right? It's that appreciation is fantastic. And that's what is really going to set them apart.
We set our option prices in your lease. We set those for a reason at a very low rate for you, so that you can benefit from normal market appreciation and conditions. We haven't been in a normal market in the last couple of years, but in terms of it's
to our customers' benefit, though.
Yeah, so. Customers benefit, yeah, and then some, right? So, which is great for the customers, but but it is important to understand that. And agents, close your ears on this comment. But also for the consumer, the benefit is they don't have to pay additional costs when they are purchasing. They don't have to move, so they don't have those costs, as you pointed out. They don't have additional agent commissions to have to pay, because they're not going through a listing and sale process again. They're already in the home. It's more like a refinancing in that sense than it is a true purchase process. Yeah,
that's true. That's true. It is like a refinancing. Well, guys, that is actually it for that's everything that we are at a little over 30 minutes. So thanks so much for everybody that joined us today. And guys, thanks so much for answering those questions. Again, these are our frequently asked questions. A lot of you guys submitted these questions to us, so I really do appreciate that. And hopefully you got the answer you were looking for and hoping for today. So, well, Patrick, Darryl, thank you so much for being on today, and we will see everybody here in 2 weeks. See you then, everyone.
Good deal.
Take care.
Alrighty.
Thanks, Aaron.
All right. Bye-bye.
Have a good one.
Bye.
Take care. Bye.